Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, September 4th, 2018. I hope everybody had a nice long 3-day weekend, at least here in the U.S., and good weekend everybody else. As trading gets about to get about to get underway, excuse me, it's a couple minutes before the opening bell. I wanted to do a quick update. Posted some charts on Right Side of the Chart on the front page today. I posted the futures, but I'll go over the indexes as well and some notable developments, some things to watch out for. I want to talk on the VIX real quick and something that may have an impact in trading in the coming months here, especially this month, is rebalancing of the S&P 500 sectors. We're going to see the first big changes in a long time, and there's going to be a lot of movement, tremendous amount of shares to be sold in some of the big market leading stocks as they move in and out of from one sector to another, and there's also some rebalancing within sectors. So we'll get to that. Just starting out here, these are the charts as of Friday's close. Like I said, the market's about to open in a couple minutes. Futures are down a little bit. I'll get to those charts in a second. So what I'm watching, I'm looking for a pullback this week. We're sitting on support now, so we haven't triggered. We did break some 60-minute trend lines, so we have early sell signals, and I'm waiting for, as I posted earlier today, some support levels. Both the S&P 500 E-mini futures and the Nasdaq 100 E-minis are both parked right on support, minor support. Uh, Appears to me those levels will go most likely this week, whether it's today or later in the week. But if so, we're looking at pullbacks. Just nothing much at this time. We're talking about 2% or so on QQQ. My target would be this intersecting uptrend line and that 182.64 support level. So from where we closed on Friday, if I zoom in, try to grab the top of Friday's candlestick, yeah, you're talking about those lines should come in together if and when we get there. And that's a little over a 2% pullback in QQQ. You can see the negative divergence. And again, we're on a 60-minute chart here. Here's SPY. SPY broke down and closed on a back test of the wedge on Friday. So you're looking at a drop of, I think, at least about 1.5%, and quite possibly if we get some traction, that would again be my minimum target. And you can see T2 down here. You have an uptrend line. Let me jump back a little farther out in time, go out to a 120-minute chart. Here's a fairly well-defined uptrend line. It comes off the early April lows, one, two, three reactions so far, and I think that's would be my at this point in time with market conditions being pretty bullish right now. That's a dip you might want to buy if you're looking to buy a pullback on a dip or short, and you want to cover. That's about a 3% or so drop in the S&P 500 or SPY. If we get there, again, that would be at this point in time my max downside target. Whereas on SPY, you can see we just opened up. We're trading now. We're down a small amount on SPY, about 0.2%. So again, from where we're at right now, looking in the next week or so, about a 1.5% pullback. And again, pending the sell signals that I posted this morning, which I'll get to here in a second. So that's SPY one more time now that the market's open. QQQ also down the same amount, zero point 0.2. And there's that level. We'll get to the futures here in a second. This is a support level I'm talking about. We'll see it in NQ very well as SPY. So we need to see pretty much today's lows go, and that's the same as last week's lows. You can see here's Thursday and Friday. So the market's been flirting with this level. Let's get to the futures real quick and look at those. All right. Okay, this is NQ, the NASDAQ 100 E-mini futures, and you can see that level there, pretty well defined, and that comes in about 76.25 right there. So again, we were flirting with that level last week. That's Thursday and Friday. We've had several tags of it so far, and you can just make it out. Again, it's what I refer to as a minor support level, but these are 60-minute charts. I'm not looking at anything more than a pullback trade for at this point in time. But there's the uptrend line right there. So you can see we broke down in trading last night and into today, and had a pretty decent pullback so far. And sorry, I had to pause the video there for a quick interruption. So there it is. Let's just not even read too much more into it. That's where we're sitting. We either bounce from here, hold support. Anything is possible. Maybe go on back test the wedge. But again, the markets are getting very heavy, very overbought in the near term. A lot of we're overbought on the 60-minute charts, the intraday charts. quite a bit. Negative divergences were leading up to those highs on the 60-minute charts here. And again, I do favor a break of that level. And in the futures, if you're a futures trader, you can see some targets here. But I think we moved all the way down here. I think this is what is that, 74.68 or so. That's not a hard target, but that's a rough estimate, and that would give us a drop from where we're at right now. Measuring it out, that's about a 2.25% drop or so. So maybe 2% once that level breaks. And you can see actually you can draw a little more divergence here that occurred over the weekend in the overnight trading session on that most recent high right before we broke down. You can see the divergence continued to steepen there. So there it is. And like I said, I always say support is support until and unless broken. So that would be, although we had a sell signal here on the breakdown, we still need to take out this minor support level on NQ as well as ES. We'll get to ES in just a second here. Okay, this is ES, the S&P 500 E-minis, and you can see also a pretty well-defined uptrend line here on the 60-minute chart right there. There it is. Simple breakdown, back test right here. We broke down, we back tested the line from below and started to roll over. And just like NQ as well as QQQ and SPY, you can see that's a pretty well-defined support level. I have the level here marked as 28.93.87, so we'll call that 28.94. However, you can see two reaction lows. We had a reaction low here. What was that? The 31st. That was Friday, and that we had another reaction low today in the pre-market session. And I'm holding the crosshairs at about 28.91. So you call it 28.91, 28.90 to be safe. And what you want to see is a break of both ES and NQ, an impulsive break. And again, I think we'll get it. I think it's coming. And pullback target from where we're at right now, I think we'll come down here at least right here. Let me grab this up. That's about a 1% drop or so. Yeah, about 1% drop, and possibly a little bit more down there. So we'll call it about 1 to about a 1.8% drop is what I'm looking at right now. And again, that's minimum. If something happens, if we start to see some impulsive selling, if I notice anything else on the more significant daily charts, there's certainly the potential for more. These markets are quite overheated right now. Sentiment is about as bullish as I've seen it in a long time. And those are some of the recipes you need for a deeper correction. But that's what I'm looking at right now. So whether you're bullish looking to buy a dip or you want to game a quick short trade, you get 2% in ES or NQ, that'll put a few pennies in your pocket, as you know, if you trade futures. So, and even if you're trading the ETFs, QQQ or some of the leverage ETFs, it's still not a bad trade if you get it quick, get in and out, hit and run. Again, if those targets are hit, I think they'll be hit this week, and even though it's an abbreviated trading week. Okay, and let's just wrap this video up talking quick overview on the VIX. We'll look at VXX. I threw that out there as a potential trade idea a few weeks ago. I still think it looks good. Um, what we're seeing, I had a member in the trading room, Susan Trade 3, posted a link to an article and pointed out that the VIX has been rising, and it's something you usually don't see. The VIX has been rising along with the equities market in recent days, last couple weeks here, and that it is often a harbinger of a correction in the markets. When you see the volatility index rising along with stocks, we saw that back in January, both the VIX and the market going up leading up to those January highs. This is where it started to tick up back here when the market was going up, and then you had that big explosion once you had the correction. Now, I wanted to point a couple things out on that, and I'm going to get to this and just talk real quick. If you're not aware, both the S&P Standard & Poor's and MSCI, those are the two main companies out there that have that track indexes and sectors, put together indexes and sectors. You're all familiar with the S&P 500, that's Standard & Poor's, and that's comprised of 11 sectors within there. I often do videos covering those sectors to try to gauge where the market's going. We're going to have the biggest reshuffling of the sectors since I believe going back to I have it written down here somewhere. It's been many years, and we've had a few minor tweaks. The last minor change was they spun off in the S&P 500. They spun off REITs out of the financial sector to its own new little subsector, but that was just again a minor change, and it's so small it had very little impact. What we're going to see coming up here at the end of this month, around I think it's September 27th or 28th after the close, the S&P will rebalance. and they're going to eliminate the telecom sector, and they're going to open up a new sector um, called communication services. And again, that'll happen after the market closes on September 28th. MSCI they actually won't change until December 3rd, so not too far behind, a little more than a month behind. You'll see MSCI change their indexes. So what that means to you, what it means to trading and investing, is there is already started. There's going to be and continue to be a tremendous amount of rebalancing because I'll go over some of the highlights here. You're going to see a lot of the big tech stocks, a lot of the big FANG stocks come out of the tech sector and go into that new telecom services sector or communication services. I'm sorry. And what that means is simply there's many different sector ETFs and mutual funds out there that track those sectors, and they are forced to rebalance as the S Standard and Poor's and MSCI changes their sector weightings and eliminates the telecom sector, and they've already started that. Some companies like Vanguard have already tried to get ahead of it because you don't want to wait to the day it's rebalancing. Everybody's buying and selling at the same time. But with that being said, again, we're talking a tremendous amount of stock. These are the world's biggest companies, and as we all know, in recent years, we've seen this unprecedented growth out of just a handful of companies, those big FANG stocks, Alphabet, Microsoft, Google, I said Alphabet, Apple, and these companies are now huge, Amazon especially, and it's going to have a big impact. So let me go over some of the highlights here. And again, I'll tell you what I think it'll mean to us and what it'll mean to the VIX going forward. I think it's already had an impact on the VIX and will continue to do so. It's just my take on it. So again, we're going to eliminate the telecom sector and we'll have a new communication services. That's going to happen, as I said, after market closes September 28th. I'm citing an article from Barron, so bear with me here. Did some highlighting here. Okay, one of the biggest impacts on tech will be on the tech sector that has grown so big at 26.5% of the S&P 500, it has produced more than half of the market's gains this year. And that's crazy. One sector produced more than half of the market's gains. That shows you how top heavy those big FANG stocks are. And so what they're doing is they're going to cut the tech sector down to size. Alphabet and Facebook are leaving, along with Activision Blizzard, Electronic Arts, Twitter, and Take-Two Interactive Software. Those losses are going to chop about 23% off the tech sector's market value, and then the tech sector will be more oriented to chip makers, hardware, and software like Microsoft, Intel. And they say the tech sector will look like old tech from back in the 1990s and early 2000s, where it was dominated by hardware, software, and semiconductor companies. So um, also note that Apple will be even more of a dominant presence in tech at 20.2% of the total. Again, it'll make up 1/5 of the tech sector. Right now, it's at about 15.6%. So that'll be a big move there. So XLK, for you who are not familiar, that's the tech ETF. Discretionary income is going to have a huge impact. I've talked about this quite a bit recently. XLV, which is the consumer discretionary ETF. I'm sorry, I believe that's XLY. XLV is healthcare, if I'm not mistaken. XLV, the consumer discretionary ETF, will see Amazon is going to lose a few companies like Disney, Netflix, Comcast, and let's see, Amazon is going to jump from a current weighting of about 1/4. It's at 27.7% right now. Amazon will jump to 35% of that sector. That's consumer discretionary. So over 1/3 of the returns are going to come from one stock. So again, guys, what does this mean? It just means we're going to see rebalancing, and as such, that means volatility. These shares are physically going to be sold. It's not just a journal entry. They have to physically buy and sell these shares. So I think that will continue to put a bid under the VIX. Now, let's say I'm wrong. That's just my theory. Maybe it's been written out there, read. I haven't. First I heard about it, I was reading up on this rebalancing. So I think that's what's caused a tick up in the VIX. But let's look at something from a technical perspective. Here's a long-term chart of the VIX, 10-year chart. Let's zoom in back into recent years. I have two lines on this chart, two support levels. One's about 1150, this white line. Now 1150 is where the majority, if you look back, go back in time, you'll see that was pretty much the floor, the base of the VIX. Remember, the VIX will never go to zero. It's a measure, it's a volatility index, measures put calling versus put and call buying on the market. So when you have a lot of people buying puts, they expect the market to go down, or it is going down, and they're hedging, and the VIX pops up. And when it's bullish, the VIX falls because more people are buying calls than puts. But you can see, as I've circled here, that was pretty much the floor. And we had a couple. This was an extreme outlier up until this point here. Now, what happened? This was an unprecedented, never before seen in history, an unprecedented period of low volatility leading up to that high that we had earlier this year in January of 18. We've never seen volatility go this low. We've never seen such a slow, steady grind up in the market up until that point. And then we had the big correction there. So this was, again, unprecedented. And it's over with now. We'll see. Maybe we'll go back to that level. Anything's possible. But again, when you go back for many, many years, you can see this was very much the floor. And this is what I've always said with the VIX. Usually I try to stay away from the VIX, especially if it's in the middle of its range. I don't ever care to trade the VIX unless it's at an extreme high end of the range or the extreme low end of the range. You want to go long the VIX, long volatility when it's at the low end. If and when the charts confirm, that's very important. I don't buy the VIX just because it drops the low end of the range. I'll go long the VIX if it aligns, if it's at support and the charts are bullish on the VIX and I see a bearish development on the broad markets and or they break down already. So in other words, I'll align my longs on a VIX trade with the breakdown in the stock market if it looks like we're going to get a correction. So again, I wanted to point out this range. And again, you have these temporary blips to the low end of the extreme end of the range. And there was one recently right there. That's what I want to cover. And that's about 1023. So what are we at? We've been at for a while now that at least in recent years, going back to 2012, late 2012, early 2013, we continue to be at support at that 1150 area, and so that's a long-term outlook of the VIX. When we go to the daily chart, what we see here is we see bullish divergence, just like we had positive divergence right here. You can see my divergence lines. That preceded this huge spike up, and as I always say, if you follow my analysis, divergence is not a buy or sell signal. It is merely an indication that a trend change is likely. Then what you do is you align or you wait patiently once you have divergence, whether it's bullish or bearish. You wait for a sell signal or buy signal, and that comes usually on the break of a trend line, chart patterns, key support or resistance level, maybe bearish candlestick reversal pattern or bullish candlestick reversal pattern. But you can see here, again, all these divergence plot plus D, positive divergence, positive divergence right here. I didn't add all the plus D's, positive divergence right here, rally, 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 rally. So all of these rallies came in this big one after divergent lows, and we have, as you can see, a divergent low right now. We had a divergent low at that spike that recently came down towards the low end of the range right there. So that's it. So I can make a case for a pop or a rally in the VIX soon. We just need those sell signals. We need the equity markets to confirm. We may get those short-term sell signals this week, but better, much better, in fact, if you're a swing trader, that we get those more important sell signals that I've been talking about recently. Let's go out to the daily charts. Here's an uptrend line off the early April lows. That same trend line that's my pullback target right now, my max pullback target near term for the SPY. But if that level breaks, this is a daily chart. This is a more significant level, and that's a very important level. I've already covered that in recent videos, about 279 or so, along with this uptrend line. If that level goes, that would trigger a pretty powerful swing sell signal. We're far from it right now. I'm just looking near term, and that's the levels I covered this morning. And likewise on QQQ, a break of this uptrend line, which right now would just be my near-term pullback target, that would trigger a more powerful sell signal. And then finally, to conclude this video, since you can't trade the VIX directly, you can buy futures on the VIX. You can buy options on those futures, or what a lot of retail traders do, you can buy these ETNs that track VIX futures. And VXX is one that I mentioned recently. Back right about here, I think it was. So we inched a little bit lower, but surprisingly, relatively speaking, that is. I'd say relatively speaking, because the VIX moves, and so do these ETNs in big percentage gains when they move. You can see right there, 117% rally, 28% rally. So when I say the VIX, relatively speaking, has not gone down much, maybe 3, 4, 5%. That's not a whole lot from where we were back then. Yeah, 2.5% or so from where we were a couple weeks ago when I mentioned it. So what's happened since then? We just simply extended the divergence that was in place. We still have a divergent low. We have a positive divergence right there. And if and when we get some decent sell signals, these short-term sell signals that I'm looking for this week should pop the VIX up. I would say at least, or sorry, VXX, which tracks short-term VIX futures. I think up here at least about 33.14. That'd be about a 10% pop. So I think that's likely to happen this week. And again, the potential is certainly there. Looking at the scope of these divergences, this last time we had a divergent low with a comparable divergences right now was back leading up to those January highs, and that was followed by a 117% rally. While I don't expect that much right now, it's possible if the charts start to develop. If we get this near-term pullback, and then some of those minimum targets that I'm looking at don't hold, and the market moves lower, then you could look for easily a move up here. That's about a 33% run up to that first target, and potentially any of these other targets, but we're not there yet. Like I said, the charts are dynamic, and so is my analysis. So for now, looking at that near-term pullback, and we'll watch those levels and go from there. If they're taken out, then I will follow up with some additional targets, especially for members of the site. I'm always posting any updates within the trading room, but any major developments, I'll put a post up on the front page on the broad markets. And that's it. So let's wrap it up here. Again, keep an eye on the VIX. Keep an eye on these near-term levels, and remember, we're going to see a lot of reshuffling with these major stocks over the next few weeks here, especially leading up to the end of this month, where the S&P does their rebalancing. And my guess is that's going to, in itself, lead to increased volatility in the markets. All right, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.